Hey everyone, hey, Brian Neff here with Retirement Hustle, and today's video is the beginner's guide to side hustle taxes. So let's talk paying taxes on your side hustle. Whether you've jumped into the gig economy to pick up some extra cash or did so with a plan to grow a successful side business, if you don't plan for taxes, you're in for a big shock come tax season. This video is going to talk about the ins and outs of paying side hustle taxes, as well as the different tax advantages for side hustles. But yes, you will have to pay side hustle taxes. So if you made more than $600 in a calendar year from a company, you need to pay taxes on that earned income. According to Yahoo Finance, nearly half of Americans have a side hustle, working as Uber or Lyft drivers, picking up gigs through TaskRabbit, or getting additional freelance work. The average worker with a side gig brings in an extra $1,122 a month, working roughly 12 hours a week. This means most side hustlers are earning more than $600 a year, which means they owe Uncle Sam. With that in mind, you should anticipate paying taxes on your side hustle. I know, it ain't fun, but somebody has to do it, right? The reason that comes as a surprise for most newbies is that they're used to paying their employer, taking taxes out of their paychecks for them. Since you work for yourself, though, in your side gig, you are now the responsible person for paying those taxes. That's why April can be a big surprise for those new to the side hustle biz. If you haven't been preparing to pay taxes on your side hustle, you'll likely be surprised by how much you actually owe the IRS. Lindsay Van Thone explains from Freelancers Union, you owe taxes on the profit of your business, your total income minus your expenses. But the total percentage depends on how much income you make overall, of course. Expect roughly 20 to 30% as a rough estimate. This will seem like a huge hit if you haven't prepared for it, though. So, paying quarterly taxes on your side hustle. Another surprise for many side hustlers is having to pay quarterly taxes. If you owe more than $1,000 in taxes, you're required to file and pay quarterly estimates instead of filing taxes once a year. The College Investor suggests a simple rule of thumb for determining your quarterly tax payments is to take your projected annual income and multiply it by 30%. Many side hustlers find that they actually like quarterly tax payments because they don't feel as big as a large lump sum come tax time in April. Christy Bieber from The Motley Fool explains, if you don't make quarterly estimated tax payments and you owe the IRS a lot of money at the end of the year, you'll be subject to penalties based on an underpayment. Now, below this video, you'll see the Freelancers Union's quarterly tax guides for freelancers and the self-employed for more information on that. So another thing, folks, we need to start treating our side hustle like a business. If you want to get the most out of your side hustle, then you need to treat it like a business. When you shift your mindset from bringing in extra cash to actually running a business, you will generate more income and have a better idea of your tax implications, and you can plan accordingly. Planning may include looking for write-off opportunities and making decisions on certain purchases based on what you can deduct. Business owners use software to track expenses, keep records, and maintain finances, and they use a business credit card for business expenses. Often, beginner side hustles don't view themselves as running a business, but they absolutely are. When you act like a business owner, taxes will be easier and you're less likely to have sticker shock come tax time. Next thing we need to look at is making sure we choose the best business structure for our side hustle taxes. So as a side hustler, you need to choose the best business structure for your business. If you're just starting, you're most likely considered a sole proprietor. This means you've started making money on the side that you can claim on your personal tax returns, but you are not a legal entity. For example, let's say you start walking dogs as a side hustle. Once you go over $600, you are required to pay taxes on that side hustle and are now considered a sole proprietor. Now, let's say your dog walking business has picked up steady clientele. You may want to create an LLC, which is a limited liability company. As an LLC, you're personally protected against business liabilities. It also gives you more tax advantages. With an LLC, you can choose between listed as a sole proprietor or as an S Corp. If you meet the criteria to be a limited liability company S Corp, you're considered both the business owner and an employee. This means you pay less taxes because you only pay self-employment taxes off your employee salary and then income taxes off the additional business profits, rather than both self-employment and income taxes on your profit. Next, we need to deduct expenses to pay less side hustle taxes. So if we're treating our side hustle like a business, then we're entitled to claim deductions for business-related expenses. This gets a lot of beginners excited, but it doesn't mean you can claim deductions for anything and everything. However, there are plenty of business expenses you can claim to reduce your taxable income. Basically, you can claim deductions that relate to your business. For example, if you have an Etsy shop where you sell artisanal homemade goods, then you can deduct the cost of your supplies. Here are some common side hustle deductions. Your home office or co-working space. You can claim your home office if and only if the space is dedicated solely to your business. How about your website? If you pay a yearly or monthly fee to maintain your website, you can deduct this expense. There's your telephone and internet expenses. If you use your telephone or internet for your business, which most of us do, you can now deduct those expenses. How about office supplies? Any office supplies that are purchased for your business, including computers, printers, etc., can all be counted as deductions. Additionally, computer software used for your business, such as accounting software, can also be deducted. What about advertising? We all love advertising, Facebook ads, that kind of stuff. Whether you advertise on Facebook or send out flyers, advertising costs also count as deductions. Meals, you can deduct 50% of a meal if it is for entertaining your clients. What about car expenses? With vehicle expenses, you can either make a decision based on the deduction based on your total amount of miles, or you can use the IRS's standard mileage rate. Over the years, I've actually used both, depending on what I've done more of that year, or if IRS's standard mileage deduction was actually higher for me that year. So I cannot stress how important it is, though, to track and document everything that you can hope to claim as a deduction. Save every receipt, track your usage, mileage, and keep good records. So next, make sure you, down below the video, you'll see some related topics, such as the 7 best budgeting apps for side hustlers. Take a gander at that, because that may help you in this process also. Now, how about asking your side hustle company about possible write-offs? As a part of the sharing economy, there are several companies that provide individuals with side hustle opportunities, such as Uber, Shipt, and Instacart. These companies do not withhold taxes for you, so you are required to do the hard tax work yourself. However, though, these companies typically offer helpful tax information, like the types of deductions you can make, such as mileage while you're driving for Uber, or parking fees you pay as a grocery delivery driver. You need to prorate your expenses as needed. Unfortunately, you can't claim your entire internet bill or the gas for your vehicle as a deduction, but you can prorate expenses for your deductions. You can't deduct anything deemed personal use, but you can claim prorated deductions for expenses incurred using personal goods, such as your personal vehicle. So if you use the internet personally, you can only claim the portion of internet usage related to your business. Likewise, if you drive for Uber or Lyft, you can't claim all your vehicle expenses as deductions, but you can claim a mileage deduction. Services like Uber keep track of your mileage, which makes this easy to prorate. Additionally, if you do have a home office, you can deduct a percentage of your home's annual electricity cost. Another thing that you can do is contribute to a retirement plan. With self-employment income, you can take advantage of different retirement accounts beyond the tax-advantaged 401k and IRA accounts. By contributing to a SEP IRA, a simple IRA, or a solo 401k, you can reduce your tax bill and put more into retirement than you typically be allowed to. According to Finance Buzz, for a SEP plan today, you can contribute as much as 25% of your earnings, or up to $57,000 in 2020. For a 401k plan, you can contribute that amount plus your annual salary deferrals of up to $19,500 and an additional $6,500 if you're 50 or older. Since the money is tax deferred, since the money contributed is pre-tax, you aren't responsible for paying taxes on it until you withdraw it. How about opening a separate checking account? The more you side hustle, the harder it will be to keep track of your business-related expenses and transactions. That's why it is wise to open a separate checking account just for your side hustle business. This will make it so much easier to keep your personal expenses separate when it comes time to file your side hustle taxes. Rather than having to sort personal and business expenses on your bank statements, with a separate business checking account, all you have to do is print out a financial quarterly report to file your quarterly estimates. Plus, if you do choose an LLC, it makes you look more like a legitimate business. How about taking advantage of software and apps for record keeping? Along these same lines, it's critical to invest in software and apps for tracking your business finances. You have to keep good records for taxes, especially in the event that you're audited. Instead of keeping a box full of paper receipts, which I've seen that done before, download apps that allow you to snap pictures of receipts and store them in a virtual receipt bank. Many side hustlers use software such as QuickBooks, Quicken to manage your business finances. Additionally, there are apps that help you track your mileage, such as Stride. So you need to calculate your side hustle taxes and save monthly. The best rule for side hustler beginners: calculate side hustle taxes and save monthly. It's easy to see your side hustle money grow without thinking about what you will owe the IRS. But this is a mistake. Don't let April sneak up on you and surprise you. Instead, estimate how much you think you're owing taxes each month. Aim for roughly 20 to 30%. That's a good rule of thumb. Then take that amount of money and set it aside. If you save for taxes out of the side hustle income you bring in each month, you will not be shocked when it's time to pay taxes. Finally, how about speaking with a professional? There's a learning curve when it comes to paying taxes on a side hustle. Rather than incorrectly filing your taxes and face penalties, it's wise to speak with a professional accountant in your first year. They'll help you find any deductions you missed and identify other ways you can pay less than taxes. What you pay the accountant will be worth the savings on your taxes. Down below this video, hope you guys like this video. Make sure you connect with us on YouTube for more side hustling tips and tricks. Have a great day.